What's up, traders? Welcome to 7minutestocks.com, putting the odds in your favor utilizing technical analysis. Today is April 29th, 2012. This analysis is for entertainment purposes only. Under no circumstances do any statements here represent a recommendation to buy or sell security, stocks, options, and or make any form of any type of investment. All right, let's just get started here. The first thing I want to look at is the S&P 500. So in a previous video, I talked about the S&P 500 having the possibility of testing this double top here, but it could be considered a triple top. Some may say that, and it does look like that there is a possibility we may actually test these highs here. Now, we may come up and trade a little sideways first before we get a boost higher. However, I'd like very much to see it just go straight into here, because if it does, then the chances of it bouncing right off and coming straight down is a lot higher. If we consolidate first, and that kind of gives it a little bit gas to just push higher and potentially, like anything can happen, potentially go even higher, okay, above, like around here or wherever the next resistance line would be. All right, let's take a quick look at the VIX here. In the previous video, I said we might get a small bounce on the VIX, and we sure did. We got a bounce right off of this trend line here. The VIX popped up a little bit. The VIX is definitely inverse to the markets itself. So we got a small bounce here off the VIX. We will get a resistance points here. These two moving averages are pretty close together. At most, I would think that we will get a gap fill there before coming back down. Okay, so that's the VIX. Next thing I want to look at is the dollar. Everybody knows, again, the US dollar is inverse to the markets. Dollar down, markets up. Markets up, dollar down. In a previous video, I talked about this head and shoulders pattern here. We have broken down to the head and shoulders pattern. I said we're going to retest this neckline, because that's sometimes a natural thing that the head and shoulders patterns do. So we got that retest on Friday, and then we just came straight down, which is what gave the markets a little boost higher. Okay, we're gonna get some resist. We already have some resistance here, right? But it's not very strong resistance. It's gonna be kind of weak, which is why we didn't go all the way down. We're gonna get strong resistance here at the 200 moving average. This is also at the 7820 calculated. This is a mathematical calculated line here, and we also have a double bottom play here. I doubt it gets to the double bottom. Anything is possible, but we have a lot of resistance right here at the 200 moving average and this calculated line. And I believe, if I'm not mistaken, we may actually have a Fibonacci retracement right around that level as well. Actually, I would have to go a little further back. Would it be from here to here? So all right, that was my mistake. It wasn't for this for the dollar, but we do have two indicators here saying that we have a possibility of actually testing the 200 moving average. Will we get there? Anything can happen. That's just my opinion. All right, let's take a look at a stock that I'm currently in play on using technical analysis, and this is a COP. All right, so we have on COP, we have multiple indicators. We have this trend line coming up. Okay, we also have a breakout from here. I remember I believe I explained the breakout a little bit on the previous video. Whenever you have a breakout, you're going to have support and resistance, right? So we have a breakout here. We had upside consolidation, and then we broke out from this consolidation period here. Therefore, over here will be a support line. In addition to that, we also have the 200 moving average, so that gives us three indicators. And last but not least, we're at the 618. I don't know if you can see it here, the 618 Fibonacci retracement line. Let me just delete all the drawings here. Oh, including the Fibonacci retracement. Let me just load the drawings back. It's a 618 here, so that gives us actually 1, 2, 3, 4 indicators that we would get a bounce. I picked up COP on the long side, and next day we got a nice pop. This is a reversal candle. I'm thinking that we're going to at least get to this area here around where the 200 moving average is and where the Fibonacci retracement line is. We had a down day on Friday. What I did was, and this is what all traders need to do, is lock in the profits, or at least lock in, put a safety guard. I do have a stop a break-even stop on COP already as we speak, meaning if this stock turns against me on Monday and comes back down here, I stop out for break-even and I lose absolutely nothing as if I never entered the trade to begin with. All right. The next thing I want to talk about is Amazon. Amazon, in the previous video, I said it's going to open at 223. We actually opened on Friday at the open was 224.83. Not bad. I also said to sell short as a day trade, right? Right at this level here. And then let me show you something. As a day trade now, this is an intraday trade. Let's take a look at the 10-minute chart. All right, now what you'll see is, remember those two green lines, and on the daily chart, this bottom green line here, we opened right down here. We went right into this green line, right into gap fill, and it came straight down. Okay, so let me just give you an idea. This line here is approximately 226.63. We came all the way down to 221.19. That's a $5 drop. Okay, $5 drop in a matter of an hour and 10 minutes. Okay, so this is why technical analysis does work. All right, you would have stopped yourself out, you would have made your $5 profit. Everybody's happy. Can't seem to scroll all the way back there, but let's take a look at the daily. Okay, so we had that bounce on the intraday, then we came back up all the way up to the 768 Fibonacci retracement line, and then we pulled back all the way back down there. Okay, so that's Amazon. If some asks where do I think Amazon might go, that's going to be a tough one, being that this was a day after earnings. We want to give it some time after earnings for everything to settle. I mean, you got brokerage companies doing margin calls and all this kind of stuff. People who were short are covering their shorts now, so you know it gave this stock a boost. So right now, let it create a pattern. Let's just see what it does first. We don't want to just jump the gun and just, I mean, it could go higher, it could go lower. It's just not a stock that I'm be willing to risk my money on at this time. All right. All right. So the next stock I want to talk about, and I believe I mentioned it in the previous video, is Google. Google, I said we can take a intraday short over there. Unfortunately, Google created this doji candle on Friday. It would have been much better if Google went right into this line. We had the two moving averages crossing over each other. We had this nice resistance line here, and I believe if I'm not mistaken, we also had a Fibonacci retracement. I don't know if I saved that. There we go. Yeah, we also have the Fibonacci 50% retracement. That would have been, I had an alert here for 620.34. That would have been a dead short. However, it didn't get there. It looks like we may be consolidating to the side before it pop higher. And you know, it didn't do that, so we're gonna just have to scratch Google. If it reaches into this line, I will not be shorting. Okay, so thank you very much for watching, and we'll see you in the next video.